Hello, my name is Fred Amrine, and I'm the founder of Pay for Ed, a company that is solving the student loan crisis. This program is focused on our Student Loan Repayer section, which will be available later in May. If you're unaware of our products, we provide a comprehensive solution to how to pay for college before, during, and after. This program is going to focus on our Student Loan Repayer, which impacts the recent college graduates, engaged, and married couples. The payer helps students and parents make better decisions on their student loan repayment. This is a very complex area. There's over 9 different loan repayment options. And if you factor in additional loans, such as private student loans or Parent Plus loans, that the student may be responsible paying back, this can be overwhelming for most students and parents. For the engaged couple, it becomes even more complex, and they have to factor in how they'll file their taxes, and based on what loan repayment options they're selecting and how their debt is structured. All critical issues that will affect their financial future if not analyzed correctly. Part of the problem in this process is the lack of knowledge across the board. The loan services in colleges cannot address the personal financial issues, such as the debt structure on the private and federal side together, in addition on how they need to file their taxes. The financial service industry has not helped much. CPAs and financial planners have not been able to provide second opinions or education to the public so that they can make better planning decisions going forward. Servicers have been sued because of lack of good information. And NerdWallet just recently wrote an article where they identified 130 companies that are part of scams or issues that you need to be aware of. In our effort to fix this problem, we have created a course for financial professionals that has received the CFP Quality Partner Certification. Financial professionals, both CPAs and financial planners, get the information they need to help the public make better decisions. So part of our approach has been to solve this problem. There's complexity and options that are not explained by the servicers because it crosses over into the personal financial issues and also in areas that they're not allowed to legally address, such as private student loans. Your debt structure, as we mentioned before, will drive your loan repayment option. This is part of the problem why good answers are not available to the consumer. The first step in this process is understanding your loans, the type of loans you have, and organize them in one place. Once you have that information, you then can better compare what repayment options you may have under various different tax options. This is especially true for the married and engaged couple. This information is difficult to attain and is often overlooked in the proper planning process. Once we have that information, a better analysis on should I stay in the federal program or in the private consolidation as it being highly promoted by many companies. Again, you need to have your numbers in front of you, and that's what our tool does for you. It puts it all in place and simplifies the process. As we go through this process, in those years for many young couples, we have a lot of changes, such as trying to buy a house, maybe have children, which affects their cash flows and their financial decisions and their financial futures. You need to remember, the loan servicers in colleges will often try to put you in the lowest repayment option. In many cases, that is not the best for your long-term financial goals. The first step in this process is maybe importing your federal loans from the National Student Loan Database. This needs to be done by person. Once you have that information, you can then understand what loans you have on the federal side and what loans you have on the private side. As I mentioned before, your debt structure is going to drive your loan repayment options. Here we can see the list of loan repayment options that we have. As I said, there's 9 of them available to you. If you leave the federal program to do a private consolidation, this option of returning back to the flexibility that the federal program offers is unavailable. Also, what you need to understand with the income-driven repayment methods, which includes IBR, pay-as-you-earn, repay, and ICR, is that they may have negative amortization associated with those loans. In addition, they're based off the income, and that will be affected by how a couple may file their taxes. What we've listed in our process is 1, does that methodology qualify for public service loan forgiveness? And what's the maximum income that I can have? And once I will exceed that, I'll need to go over to the 10-pay amount. These are all complexities that are not explained throughout the process, but here we've put it in one place for you. The next step is understanding the cash flow. We're seeing default rates go through the roof, and this is a lack of financial literacy that is provided to the students and the borrower as they go through this process. But understanding what their net pay is evolves into what their quality of life will be. By building a cost of living analysis students and borrowers can make better decisions on what repayment options they can have and the quality of life and level of expenses they can maintain to make sure they stay ahead of the game. Here you can see that this student will be cash flow positive by $171. So how does the system benefit the people that are in repayment? I think it gives people an objective, trusted second opinion, which is not available as of today due to the complexities. Most of the programs out there are very segmented. They either do the private or federal side. In our analysis, we help you see both together and allow you to make a better decision for your long-term financial future. In addition, we add in a simplification of the tax filing. We do recommend that you still get your taxes done by a professional because of the complexity of that filing status and the issues that you may face individually. And explaining the differences of how the taxes will be filed will impact how much your loan repayment options, especially if you're in income-based repayment methods. A big fault that we often see is negative amortization. This is often not explained to the borrower in the sense once they pick the income-driven repayment methods that the monthly payment does not cover the loan interest to the loan. And as a result, the loan balances actually will go up over time. This is a critical mistake for many borrowers as they move into their lifetime planning. Proper planning can also help you lower your loan repayment and help you save money for retirement at the same time if the proper plans are put in place. So how do we do this? How's our package work? We give you an easy to use system. It has help videos and coaching videos throughout the system so that you can navigate it very easily. There's timely webinars where you can ask questions that may address issues that you may having, and a Facebook community that also offers the opportunity to ask questions to these very important decisions you're making for your financial future. Please join us in solving the student debt crisis. Let us help you make better college financial decisions and student loan decisions as you go through this process. Please click on the subscribe button or to our product page so you can purchase this tool. Thank you for your time and have a great day.